Imagine it's 1942. The world is in chaos. World War II is underway, the economy is uncertain, and the stock market is unstable. But in the middle of all this, an 11-year-old boy made a decision that would change everything. That boy was Warren Buffett. Fast forward to today, and Buffett is considered one of the greatest investors of all time, with billions to his name. But how did he do it? It wasn't by betting on risky trends or trying to time the market. It was through a simple yet powerful investment strategy, one that anyone can follow, regardless of their starting point. Now, imagine you have $10,000. It may not seem like enough to make a huge difference, but what if I told you that with this relatively small amount, you could start on the path to becoming a millionaire, just like Buffett? In today's video, we'll break down exactly how you can turn $10,000 into millions, just like Buffett did, by following his timeless principles. By the end of this video, you'll have a clear roadmap for how to apply these strategies to your own financial journey. To understand how Warren Buffett turned a small amount of money into billions, we need to look back at where it all began. It's the early 1940s, a time of global uncertainty with World War II raging. Amid all this chaos, an 11-year-old Warren Buffett decided to take his first step into the world of investing. With $114 he had earned from his paper route, he bought 3 shares of a company called City Service Preferred at $38.25 per share. The next day, the stock price dropped. It's the kind of situation that could make any new investor panic, especially someone so young. But Buffett didn't freak out. Instead, he took it as a lesson. Instead of rushing to sell, he held on to his shares. Over time, the stock price did recover, and eventually his $114 investment grew. That experience taught Buffett a key lesson that would define his entire approach to investing. The stock market is a device for transferring money from the impatient to the patient. This isn't just about buying stocks and hoping they rise quickly. It's about having the patience to wait through market fluctuations and letting your investments grow over time. Buffett's strategy wasn't about making a quick profit or chasing short-term trends. His philosophy has always been rooted in the idea of investing in businesses that will grow steadily over time and holding them for the long run. As he later said, "Our favorite holding period is forever." This early lesson set the stage for Buffett's long-term approach to building wealth. He understood that true success in investing comes from holding on to solid investments and allowing time and the magic of compounding to work its wonders. Even if you start with just $10,000, following this principle could set you on the path to millions, just as it did for Buffett. The key takeaway here is simple. It's not about quick wins. It's about patience, discipline, and holding on to investments that have real, long-term value. As Warren Buffett's wealth grew, so did his investment strategy, and it's remarkably simple. Buy businesses, not just stocks. To Buffett, investing isn't about watching stock prices move up and down. It's about owning a piece of a real, productive business. When you buy shares in a company, you're not just buying a stock ticker. You're buying a stake in that company's future. Buffett's philosophy is rooted in the belief that investing in businesses with solid fundamentals and strong growth potential is the key to wealth. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. This approach has guided him to invest in companies that not only perform well today, but have a proven track record of enduring success. Think of household names like Coca-Cola, Apple, and American Express. Companies with strong business models, competent leadership, and a lasting reputation. Buffett's success didn't come from rushing to get rich quick. It came from sticking to his principles, buying businesses he understood and believed in, and holding them for the long haul. When you approach investing with the same mindset, You can build a foundation that leads to significant financial growth, no matter how small your starting point. One of the most important elements of Warren Buffett's wealth-building strategy is the magic of compounding. It's a force so powerful that it has the ability to turn even a small investment into millions over time. Let's break it down. Imagine you invested $10,000 in an S&P 500 index fund back in 1942. Today, that $10,000 would be worth more than $51 million. The reason? Compounding. You see, compounding doesn't just earn returns on your initial investment. It earns returns on the returns your money has already generated. Over time, this snowball effect creates exponential growth. Buffett often reminds us, time is the friend of the wonderful company, the enemy of the mediocre. This means that when you invest in strong, well-established companies, time works in your favor. The longer you hold your investments, the more they grow. It's not about jumping in and out of the market trying to catch the next trend. The key is to pick great businesses, buy them when they're fairly priced, and then hold on for the long haul. Buffett's secret isn't in picking the hottest stock or timing the market. It's about staying invested in quality companies and letting compounding do its magic. By sticking to his investments and allowing them to compound over time, Buffett has been able to build one of the greatest fortunes in history. Many people wonder whether they should invest in gold instead of stocks, especially when times are uncertain. Gold has long been seen as a safe haven, a way to preserve wealth during economic downturns. But Warren Buffett sees it differently. For him, gold is a non-productive asset, meaning it doesn't generate any income or grow in value over time like a good business can. Let's compare two options. Imagine you invested $10,000 in gold in 1942. By today, you would own around 300 ounces of gold, worth approximately $400,000. A decent return, right? But here's the thing. If you had invested that same $10,000 in the stock market back in 1942, it would be worth more than $51 million today. Buffett explains this difference simply. If you buy something that produces a return, you're going to do well. If you buy something that doesn't produce a return, you're just holding a store of value, which is fine, but it's not going to make you wealthy. This is where stocks shine. Stocks represent productive assets, businesses that generate income, innovate, and grow over time. When you invest in stocks, you're buying a piece of companies that create value and profits. Over time, those profits get reinvested into the business, increasing the value of your investment. Gold, on the other hand, just sits there. It doesn't produce anything. It's simply a store of value, not a wealth-generating asset. Buffett's strategy is all about buying businesses that will continue to thrive and create value long after you've made your initial investment. Stocks are the productive assets that turn your $10,000 into millions over time, while gold remains stagnant, just a store of value. If your goal is to build wealth, the lesson is clear. Don't just hold on to something precious. Invest in something that can work for you. One of the most appealing aspects of Warren Buffett's investment strategy is that you don't have to be a stock-picking expert to follow his principles. You don't need insider knowledge or complex algorithms to build wealth. One of the easiest and most effective ways to invest, like Buffett, is through index funds. Index funds like the S&P 500 track the performance of the overall stock market, giving you exposure to the growth of hundreds of successful businesses. Instead of trying to pick individual stocks, you're investing in the market as a whole, which increases your chances of success while minimizing risk. Buffett himself has recommended index funds to everyday investors, especially for those who don't have the time or interest to pick individual stocks. He famously said, "The most important quality for an investor is temperament, not intellect." What Buffett means by this is that it's not about being the smartest person in the room or having inside information. It's about having the right mindset. Staying calm, disciplined, and trusting in the long-term growth of businesses is what truly matters in investing. Investing in index funds is simple, cost-effective, and accessible to anyone. You don't need to worry about selecting the right stocks or timing the market, which can be stressful and time-consuming. Instead, you simply invest in a broad market fund and let the power of time and compounding do the heavy lifting. This strategy is accessible to everyone, whether you have $10,000 or $100,000 to start. It's an investment strategy that's simple, effective, and doesn't require you to be a stock-picking genius. By staying disciplined and trusting in the long-term growth of the market, you can build wealth just like Buffett, one step at a time. To turn your $10,000 into millions using Warren Buffett's strategy, there's one crucial lesson to embrace. Invest in great businesses, hold them for the long term, and ignore the noise. In today's fast-paced world, where daily market fluctuations and news headlines seem to dictate investment decisions, Buffett's wisdom stands out as a powerful guide. He often says, "The stock market is filled with individuals who know the price of everything, but the value of nothing." This is a reminder that investing is about understanding the intrinsic value of a business, not reacting to short-term changes in price. The stock market can be volatile, with prices moving up and down every day. But Buffett teaches us that real wealth comes from focusing on companies that have strong, stable fundamentals, the ones that will continue to grow over time. For example, instead of chasing after stocks based on the latest trends or news, Buffett advises us to look for businesses that you believe in, companies with a solid track record, good leadership, and a clear potential for growth. Companies like Coca-Cola, Apple, and American Express were never popular just for their momentary spikes in stock prices. They were valued because of their long-term growth prospects, solid business models, and the value they consistently brought to consumers. Buffett's approach isn't about trying to time the market or reacting to every shift in stock prices. Instead, it's about trusting in the companies you invest in and allowing them the time to show their value. He often reminds us, our favorite holding period is forever. This mindset leads to success because the longer you stay invested in a quality business, the more time your investment has to grow and compound. The key takeaway here is patience and discipline. Instead of constantly checking the stock price or reacting to every bit of market news, Buffett teaches us to ignore the noise and focus on the long-term value of the businesses we own. By doing so, you allow your $10,000 to grow into millions, just like Buffett did, by sticking with quality companies and letting time do the work. Turning $10,000 into millions isn't some distant, unattainable dream. It's a very achievable reality, especially when you follow Warren Buffett's simple and proven approach. His strategy is not about chasing quick profits or relying on insider knowledge. Instead, it's about investing in great companies, holding them for the long haul, and letting compounding work its magic. As Buffett wisely puts it, you don't have to be a genius to be a successful investor. You just have to be willing to stay the course. The beauty of Buffett's strategy lies in its simplicity. It's not complicated or full of risky moves. You don't need to have access to the best secrets of the financial world. Instead, it's about choosing businesses that you believe in, ones that have strong fundamentals and the potential for long-term growth. It's about staying patient, especially when markets go through turbulent times, and trusting that time and compounding will do the heavy lifting for you. As Buffett has said, the stock market is a device for transferring money from the impatient to the patient. This quote underscores the essence of his approach. Wealth building doesn't happen overnight, but by staying the course and letting your investments grow steadily over time, you will see tremendous results. The $10,000 you invest today could grow into something remarkable, but it's about remaining disciplined and consistent, no matter what happens in the short term. So, take that first step today. Start investing with the knowledge that you don't need to be a financial expert, just someone willing to invest in solid businesses and hold them long-term. By following Buffett's strategy, you'll set yourself on a path where your $10,000 can grow into millions over time. The journey to wealth starts now, and with Buffett's timeless wisdom as your guide, turning $10,000 into millions may be more within your reach than you think. Stay focused, stay disciplined, and trust the process. You've got the foundation to succeed. If you're ready to start your journey towards building wealth, the first step is simple. Begin investing today. Remember, it's not about rushing or getting rich quick. It's about making smart, patient decisions and letting time work its magic. Take Buffett's advice to heart and focus on long-term growth. Start with that $10,000, and who knows where it will take you. If you found this video helpful, make sure to subscribe and hit the notification bell so you don't miss any of our future content. We'll continue to break down more powerful strategies, share insights, and help you build a solid financial future, just like Warren Buffett. Thank you for watching, and stay tuned. Your journey to financial success is just beginning. Keep learning, stay disciplined, and we'll see you in the next video.